The overall stock market has turned around dramatically from its overall April lows. I mean, we can see if you invested about a month ago on Nvidia, $10,000, right now you would be sitting at around 12,500. In just a matter of a month, that is insane growth. And if you even picked up at the lows of April, those returns would be a lot higher. Unfortunately, after we see returns like this, it does make it a little bit harder to find certain companies we want to invest in. So, in today's episode, what I want to do is take a closer look at four different styles and four different stocks that I wouldn't mind investing right now, even after this massive rally. So, let's take a closer look in today's episode. All right, so before we get started, you're going to see most of the stuff we're going to look at today is all thanks to finchat.io. Check out slash Jose for 15% off, 2 free weeks with no credit card needed, and you're going to see all the cool things we're going to showcase today. So, the first type of company that I wouldn't mind investing in, the first stock, is actually going to be a semiconductor ETF. Let me just say, I always like to put my money to work, but sometimes when we see massive rallies, it becomes a little bit harder for me to say, hey, look, maybe I should put some of my money into Nvidia. Maybe I should put some of my money into some of these high growth stocks that I like because my risk to reward ratio has shifted a little bit. And after massive rallies like we saw in the past month or two, I believe the risk to reward ratio is more to the risk side than to the reward side. But regardless, I'm not trying to time the market perfectly. So what I end up doing is purchasing ETFs. To increase, ETFs tend to be lower beta than an individual stock, no matter what market they're in. And it's within that sector, right? I'm very bullish in the semiconductor space. Right now, I believe a lot of my high growth semiconductor companies are not in my favor. I'd rather invest in an ETF approach. Now, what ends up happening is if the market continues to rally, obviously I'm still exposed. Now, if the stock market starts to give me a downturn, typically ETFs or the ETF approach tends to take a lower hit because it has a lower beta, and I get to transfer that money into individual stocks that might have taken a bigger hit. I did that during April, and it has been something that has really helped me out with growing my portfolio in during these downturns. So right now, I feel like the risk to reward ratio is not on my side too much. So I'd rather kind of focus on an ETF. And this one is going to be here. We can look at FinChat SMH, which is pretty great breakdown. And here we can see 21% NVIDIA, 11% TSM, 10% Broadcom, 4.7% ASML, 4.7% AMD. You also have some Applied Materials, some Qualcomm, some Texas Instrument. So the reason I personally like SMH is I am very bullish in NVIDIA, and I love it that it has such a massive overall approach. The other thing that I do want to showcase is kind of take a closer look at how SMH has kind of competed against the S&P 500 over the past 5 years. And 5 years ago, if you invested in SMH versus the S&P 500, SMH would have given you about $31,000 return on $10,000, while the S&P 500 did double, almost at 19.9, but you can more than triple. And I do believe in the long term of things, the semiconductor market will continue to do this, right? I do believe the semiconductor market in general will outperform the most of the overall indexes. And that's what gets me pretty excited, as there is a lot of opportunities in this space: the robotics, autonomous vehicles, drones, the metaverse, all types of AI, right? And the list goes on and on. Now, there is another semiconductor approach, and I'm showing two semiconductor ETFs, but this is still part of the one holding. And here we're going to look at SOXX. This is another semiconductor ETF, but very it's a little bit different. Again, maybe you're looking for a one that's not too exposed to Nvidia, not too exposed to kind of pure AI plays. It is 10% Broadcom, 9% Nvidia, about 8% Texas Instrument, 8% AMD. It has Qualcomm. It has a lot of semiconductor equipments like CLAC being 4%, Lam Research, NPWR, Micron, Microchip, Applied Materials, and TSM, right? So this one seems a little bit more diversified. Maybe you don't want too much of one holding, being 20% of our portfolio. SOXX kind of does that. Now, obviously, if you don't have Nvidia in your portfolio, might not be performing as well. But regardless, in the past 5 years, we can see that SOXX still has outperformed the S&P 500. SOXX is about 25,000 on that $10,000, and the S&P 500 SPY is about that 20,000. So regardless, again, I do believe this overall trend is going to continue. So that's going to be my first pick, right? Just semiconductor ETFs in general for this month, as I get to see my risk to reward ratio go maybe more to the reward side in upcoming months or so. Now, the second one is actually going to follow this approach, but it's not going to be an ETF approach. Unfortunately, there is no ETF, but within the semiconductor company and the semiconductor sector, there is one sector that I believe is very undervalued, and that is going to be the semiconductor equipment sector. And this is one that you might be like, Jose, why don't you just name one company? This is a sector that has so many industry process, right? The semi design manufacturing a chip takes so much things: deposition, materials, etching, process, test and packaging, modification, lithography. And this person, Eric Flanning, who I've never met before, but on Google came up with this great value chain. You can see all the different companies that impact the semiconductor equipment space. Now we can even see here from Nova. Nova is a stock. It's another semiconductor equipment player. They kind of give us a little bit of an ecosystem breakdown here. And again, you can see that within the semiconductor equipment phase, there are a lot of companies and a lot of different processes. And for this, while there is no ETF approach, I personally like to create my own ETF. And later throughout this episode, I will talk a little bit about my holdings. So for the semiconductor market, I'm not picking just one company. I'm picking a basket and treating it as one. Now, this might not be a favorable approach, as obviously one is buying a lot of companies doing this approach. But it's one that I enjoy because I do believe we're going to see there's a lot of very bullish sentiments for the equipment phase of semiconductors. But one thing I want to do is here kind of look at some of the forward PE ratios for a lot of these companies, and these are some of my favorites. So Besi's, PE Semiconductor, Applied Materials, Lam Research, ASML, Kulicke and Soffa, Clack Corporation, Onto Innovation, Camtech, and Nova. This is more than four stocks already, but like I mentioned, I kind of look at the semiconductor equipment phase as one stock just because it's such a unique business that and unique process that you need all these different companies. Now, if we kind of look at forward PE ratios and all this, again, powered by FinChat, make sure to check out the offer. We can see that a lot of these valuations on forward PE ratios are below 30 and between kind of like that high teens to mid high 20s. That gets me actually pretty excited for the overall basket. And here we look at BE Semiconductor. I kind of wanted to look at their 2024 Investor Day event, which happened about a year ago, and look at the slides. And one of my favorite slides here is this company, which focuses in semiconductor equipment phase, talks about all the different types of fabs that are being built all around the world. We can see a lot of United States, some in Israel, some in Taiwan, some in Malaysia. And actually even gives us the initiated date and what is their current status. Some of these are in progress. Some of these are actually ramping up right now. But overall, what's super excited is there's this huge demand for fabs all over the world. You're also seeing a new transformation in forms of technology of the way chips are being built. And both of those, I believe, are massive tailwinds to kind of the overall semiconductor equipment phase. You also have kind of a lot of initiatives here. We can see kind of the US CHIPS Act, the EU CHIPS Act, China Big Fund, South Korea, Japan. All these individual countries are kind of funding or creating incentives for the building of semiconductor fabs. So the first two are, the first one, it was the semiconductor ETF approach. The second is kind of creating a basket approach in the semiconductor equipment market. Now, these two might have been boring, but this is the approach that I want to look. I believe these two might be more on the value side, but do have a nice amount of growth potential going forward. Now, the third stock is actually one that we've talked a lot about in this channel, also one we talked in the live streams, and it's Marvell Technologies, ticker MRVL. Year to date, the stock is not doing so well. And from its 52-week high, the stock is still down nearly 45%. Obviously, from its bottom around 49, the stock has rallied a nice amount. And in the past day or so, in the past 5 days, the stock is actually up roughly 15%. Now, to me, what gets me pretty excited about Marvell is I do believe the AI story is just starting. This is their data center segment, which is kind of being run by the AI market. And we can see on a sequential basis, it still continues to grow up. And let me just put it in millions here instead of billions. And we can see the actual growth sequentially. It's going up a nice amount. And in the most recent quarter, it had about $1.44 billion in revenue. Now, with Marvell, we kind of see their overall revenue and data center market continues to grow. It was up 76% year over year. The other markets are kind of growing on the sequential year over year basis, but they're still pretty weak compared to the data center. So this is one that's pretty much driven by data center space, which gets me pretty excited. And we can see for quarter two of fiscal year, they expect about $2 billion in revenue. This would be a nice sequential growth still when this company did about $1.9 billion this year, this past quarter. The other thing that gets me pretty excited is this is a company that's helping a lot of other players develop their own AI chips. And on June 17th, they will have an AI infrastructure play. Now, Marvell Technology, like we saw in the past 5 days, has gone up about 14%. In the past month, it's up about 20%. So it definitely is one that could be very volatile and can kind of see maybe some pull down. But overall, right where we're at with Marvell Technology is one where I wouldn't be, I don't believe the risk to reward ratio has escaped me so far. I still believe there's a lot more reward than risk for this stock at current levels. Now, the final stock is actually one that I believe might surprise people because this is one that I don't talk about too much. The last time I talked about this was in my overall portfolio overview that I did around kind of the lows and how things were changing. GitLab was one of those positions that I started to add heavily into. It's now about 5% of my overall portfolio, and it's one that I don't mind adding onto these levels either. They do have earnings this upcoming week. So maybe some investors, if one is curious about this, might want to wait after earnings to see how things pull up. But GitLab, for those that are not familiar, is a DevOps sec solution. So this is pretty much a company that helps you throughout the process of not only developing your own software, but also running it and operating it, right? I come from the engineering field, and if I message most of my software engineers right now, yo, if GitLab was gone tomorrow, how hard would that make your job? A lot of those engineers would say, look, I would actually hate it if GitLab was gone tomorrow. And I really do enjoy hearing that from other players or from people who use it almost on a daily basis. So the most recent quarter, you did see kind of total revenue was up 29%. For the full year, they did grow about 31%. Now, GitLab, again, like I mentioned, they're really in for the DevSecOps is amazing. They are actually developing a lot of AI power solutions, which I find pretty exciting. And it's one that it is moving momentum at a strong rate, especially when we look at run rate revenue right here. Overall, this is what I would consider a growth play, right? It's definitely a growth play that comes with a little bit more riskier side, but I believe that this one is one where AI solutions is being used to increase its moat dramatically, especially with this GitLab Duo, which is the future of AI-driven software. They did amount some pretty cool customers and some really kind of great partnerships with AWS. And one of their big customers that they recently announced in the last earnings was Anthropic. And Anthropic was a new customer acquisition here. So we do see that a lot of strong innovative AI companies and innovative cloud companies like AWS are partnering or using these solutions for them. So overall, GitLab is one that gets me excited. My overall cost basis is in the mid 40s. And this is one that if I have time before earnings, I wouldn't mind increasing it a little bit more. Now, I do want to kind of talk a little bit about my portfolio and kind of that also determines how much I'm willing to buy. So GitLab right now is about 6% of my overall portfolio. It is kind of getting to the top range of a company that is not too heavily into the semiconductor space, right? Only selected amount of companies are actually above this. I think GitLab is one of the few non-semiconductor companies that make it in like the top four, top five in my overall portfolio. Marvell is about 2%. I am actually more in favor of adding to Marvell right now over GitLab, just because it is a smaller position. I do believe there's a lot of growth opportunity as well there, and maybe diversify a little bit as GitLab is becoming a bigger portion of my overall portfolio. My semiconductor ETF is about 12%. Again, this is my overall way to play when maybe I don't find too much value in some of the individual stocks that I own and would rather just put that money to work right away and kind of change it up later on as maybe I might get better opportunities. Semiconductor equipment ETFs are about 4%. That's another one that I'm actually getting pretty excited about adding to right now. So if I was to rank them, I think Marvell would be number one, semiconductor ETF would be equipment ETF would be number two, semiconductor ETF overall would be number three, and GitLab, because it's already 6% as an individual stock and not in the semiconductor market, it would be fourth on my list. But these are the four sectors or stocks, however you want to call it, that I'm looking to add into my portfolio or increase my position at these current price points. I would love to hear from you. What are some of your thoughts? What are some of the companies that you are looking to? As it definitely helps me escape the semiconductor market.